Next, the preparation of family financial statement. What's that? Preparation is received and payments. There are basically three segments or three categories, I would say. First of all, receipts and payments accounts. Basically, most of the family transactions are on cash transactions. So that's why the receipts and payments accounts, first number one. Secondly, statement of income and expenditure. And thirdly, a statement of financial positions. How much money at the end of the year I have in my hand to run the next year. Okay, so yeah, these are the three categories. So preparation of family financial statement, what does that mean? From the summary of family cash transactions and account is prepared at the end of the year. This is the important, at the end of the year. By classifying and summarizing the transactions is called receipts and payments account. Although it looked like a cash book of a business concept, but it is not a cash book. It is the first step of family accounting system. So receipt and payment is the first step. Received and payment is basically the first step of family accounting system. This accounting is prepared by compiling all types of cash transactions. So like in business organization, we are maintaining a cash book. But for a family, we are not maintaining, but we will collect, we will record all the cash transaction at the end of the year. What we are doing, we are actually all the receipts and cash payments, we will gonna compile it together and make this account. All right, in which from which sector we are actually getting the cash, and which are the area we are paying the cash. Right, so those we need to compile it together and then make those accounts. All short of cash receipts are shown on the debit side and cash payments are shown on the credit side. That's very obvious. Like if it's a cash and this is a debit, this is a credit. So if I pay any cash, all the cash payments will be in the credit side and all the cash receipts will be in a debit side, right? So that's the thing said over here, which are received in this year in cash shown on the debit side, and capital and revenue expenses of the year which are paid in this year in cash are shown on the credit side. Okay, if there is a capital expenses and revenue expenses, they are shown on the credit side. Expenses, cash expenses, okay, capital expenses, or what should I say, capital, and there is a revenue expenses. So any type of expenses, for any type of expenses we have to pay the money. So all type of payments basically will come to the credit side, all type of receipt will come to the debit side. So this is the first step of family financial statement, and which we're gonna prepare at the end of the year. So this is the second step. Second step of what? Second step of procedure of financial statement. Okay. Yeah. Second step. So over here, what happened at the end of accounting period? Statement is prepared to ascertain the excess or deficit of income over expenditure of a family. So at the end of year, everything like the previous one, if I say family receipts and payments account, then income and expenditure, and next the financial position. Every stage has been made at the end of the year, and to find out whether my income is deficit my expenditure, or my expenditure is deficit over my income or not. So these are the things we need to consider, and how we can do that through preparing the income and expenditure statement at the end of the year. So with the help of revenue, nature, income and expenditure relating to current year only is known as a statement of income and expenditure. So with the help of revenue, nature, income and expenditure. Revenue, we know that, not the capital income, capital expenditure, not the assets one, only the revenue nature, which is very short term and coming frequently. We are getting benefited into within a year, for the short time. So that's we will gonna consider into our, into our income statement. For example, if I'm the owner of a building, then I'm getting the rent. So rent is my income. Then if I'm running a shop, then shop rent, I'm getting the shop rent every month. So that shop rent is my income. Okay, then if I'm talking about expenditure, what it said about expenditure over here. In this statement, if income is more than expenditure, okay, then expenditure, you know that I have to pay the same as if I'm renting a house for living purpose, then every month I have to pay the rent for it. So that's my expenditure. Okay. So then for the food purpose, I have to spend some money. For example, for the food purpose, I have to spend 15,000 for the 3 people per month. So that 15,000 for the food expense is my expense. Then for the traveling purpose, I'm going to the office, I'm going to shopping, I'm going to school. So for the traveling expenses, I am considering like 5,000 taka for month. So that traveling expenses is my income. So my expense. So we have to find out whether this income and expenditure are revenue nature or not. If it is, then that's gonna be included in income and expenditure statement. Other than not. Okay. So this statement, if my income is more than expenditure, then we call it surplus. Other than profit, we call it surplus or excess of income over expenditure. Why we are calling it surplus, not the profit? Because as we know for the very beginning, that we are doing for our family, and family is not a profit oriented organization. So if it is profit oriented, then we can say that net profit or gross profit. But as we are doing this for the family, then if my income is more than the expenditure, the name will come is called surplus, or else we can write other name, excess of income over expenditure. All right, and next, if the expenditure is more than income, then we call it deficit. If income is more, then we are calling it surplus. But if our expenditure is more than the income, then we will call it deficit. Okay, over the income. So excess of income over expenditure increases the family fund, while deficit reduces that fund. Fund means that I told you the savings source. Savings. Fund means savings. Like if my income is 30,000 and my expenditure is 25,000, then rest 5,000 will be in the fund. Right? Okay. So that's called my surplus. So what can I say over there? My surplus is like 5,000. Okay. But if there is deficit, like my income is 30,000 and my expenditure is 35,000, then how I am able to save? Then I have to take money from the fund. I have to actually spend money from the fund. So that's the reason we have to be very cautious while we are making the financial budget. Okay, and that's the reason this income and expenditure is important, to know at the end of the day or year whether I am in surplus or in deficit. If I'm in surplus, then that's fine, but if I'm in deficit, then that's gonna be a problem. Okay, and third and the last one is the statement of financial position. So shortly, it means a statement of assets and liabilities. We know that from the financial statement, right? So that is on a particular date, a statement is prepared showing all the assets and liability of the family is known as financial position. Now you might have a question from where this assets and liability come. Okay, for example, I'm giving you the same example. I'm belonging a house. From where I'm getting the rent for at the end of every month. So that house I own is my assets. Okay. And what's liability? For owning that house, for belonging that house, I have to give a huge amount of money, which like I have taken some sort from the bank as a loan. So that's became my liability, right? So this is how in a family that assets and liability also occurs. Okay. So position, like business organization, family also has some assets and liabilities. For example, assets are building, furniture, investment, cash, and liabilities are loan, outstanding expenses, creditors, etc. Outstanding expenses. As I told you, when expenses became more than your income, that's called outstanding expenses. I have a very good smartphone, but I need iPhone 30 Plus Pro and all those things. So for that iPhone, I need to actually use my credit card. So every month, what happened from the credit card, the specific amount of money has been cut down. So that is outstanding. Creditors, okay, now I have to buy a car and I don't have that much of enough money to buy a car. So I am actually lending or borrowing money from one of my relatives or my father or anyone else, my friends. So that they became our creditors. So this is how, just like business organizations, in family, assets and liabilities also happen. So family do not have any opening capital because it is not a business organization, right? But family fund is calculated over here. Family fund is shown as liability. Family fund is shown as liability in the statement of financial position, just like the general reserve, right? At the very beginning, what would we think? The general reserve is our asset, but it's not. General reserve, we consider them as in liability. Same as family fund. Family fund will be considerable as an liability in the financial position. Excess of income over expenditure from the statement of income and expenditure is added with family fund. Excess of income and deficit is deducted from the family fund. I mean the surplus. Surplus will be added in the family fund and deficit will be deducted from the family fund. This is the rule. Alright, just like profit and loss. If you are making profit, that will added our assets and liabilities, our general reserve. But if you are making loss, then from the general reserve, it will be cut it off. Same as family one. Same as financial positions one. Okay, so up to now what we have done, we have discussed all of our necessity, importance, characteristics, concepts, our procedure. These are the procedure. We're listing the materials, valuations, determining possible incomes. We are actually maintaining the balance of budget, all those things. And after that, what we did, we actually talked about how we will have to follow what are the 3 steps of preparation of financial statement. And as I told you before, they don't have any designed format, any certain specific format. The format just for cash and receipt account, I mean the first stage, we have to compile all the receipts and all the payments of cash. Then in second one, we have to calculate all our incomes, possible incomes and our expenditure. Then through that, we can find out whether at the end our family is in surplus or is in deficit. If it is deficit, then it will gonna be subtracted from the financial fund or family fund. But if it is surplus, then we can add it with the family fund. So this is basically all about the family financial positions and family budget, accounting, family and self-employed enterprise. And in the exercise, we will see how these family and self-employed enterprises will gonna work. So this is it. Our chapter has been done. Now we will gonna move on to the exercises.